Bitcoin is really, I always say, the direction god for crypto. Also, the altcoins crashed heavily. And I think we all are waiting for the Ethereum ETF now and for this FUD to be over, especially this selling FUD we had.
Good morning, everyone, and welcome to Markets Daily on this Wednesday, July 10th, 2024. If you're new here, thank you so much for tuning in. This is a show where we get into the minds of the smartest people in this industry to help you and myself make sense of the latest news and market trends. Before we get into our discussion today, let's look at what's been going on in crypto. Of course, Mt. Gox and Germany's sale of millions of dollars worth of Bitcoin continues to put pressure on the market. In addition to that, this week is very heavy on new macro data. Federal Reserve Chair Jerome Powell made an appearance on Capitol Hill yesterday where he expressed concerns that leaving rates high for too long could harm economic growth in the long run. Markets, including crypto, of course, loved hearing that. Bitcoin rallied to over $59,000 just this morning, which 10x research analyst Marcus Thielen, who we frequently have here on the show, says is forming a base from a technical analysis perspective. However, in this case, it is likely just a short-term rally. Looking forward, we still are waiting for more S1 filings to come in from Ether ETF issuers that could potentially tell us what fees investors can expect to pay. Invesco Galaxy revealed their fee of 25 basis points yesterday, and we already know that VanEck is charging 20 basis points, so they seem to be in line with what issuers are charging for the already existing Bitcoin ETFs. And then tomorrow, the US will get a fresh inflation report, and we'll discuss what we can expect from that shortly. Joining us now to discuss this and more is Martin Leinweber, Director of Digital Asset Research and Strategy at MarketVector Indices. Good morning.
Good morning. Thank you for having me.
Of course, thank you so much for being here. Martin, Bitcoin this morning is up about 1.5% last time I checked. It's been positive this week so far. What do you attribute this upward trend to? Because last week wasn't as positive for the largest cryptocurrency.
Yeah, I mean, it should be up a lot more, I think. Yeah, at least if you look at crypto stocks, they held up pretty well over the last weeks. Yeah, if you look at Coinbase or mining stocks. So I think everybody is frustrated at the moment in the crypto industry because the so-called macro correlations broke down. Yeah, you have Nasdaq and S&P at all-time highs, and you look at your crypto wallet and it's down. Yeah, normally as crypto is a risk-on asset, you have a positive correlation to tech. Now, finally, we are uncorrelated. Yeah, we always talked about that, but unfortunately, when when equities are up. So I think you have these long-term positive catalysts. Yeah, we have the Ethereum in front of the door, ETF in front of the door. We have possible rate cuts. Yeah, we have the elections, which are more positive towards crypto. You have maybe an FTX cashback. Yeah, around $16 billion. So these are all positive catalysts, but we had also, as you alluded to, some idiosyncratic risks. Yeah, this selling from Mt. Gox or from Germany recently. And I think this FUD really weighs on Bitcoin. And as Bitcoin is really, I always say, the direction god for crypto. Also, the altcoins crashed heavily. And I think we all are waiting for the Ethereum ETF now and for this FUD to be over, especially this selling FUD we had.
Now, when you're saying crypto has been uncorrelated, is that a good thing for traders or is it a bad thing because it might be harder to predict market trends?
Well, long term, crypto should be uncorrelated. Yeah. If you're honest, what has Bitcoin to do with a Nasdaq stock? Basically nothing. But if you look at the rolling correlation, let's say the 90-day rolling correlations, you see a pattern. Yeah. Sometimes it's positively correlated, sometimes it's negatively correlated. And of course, that makes it harder for trader if they assume a static pattern. But to me, it's a normal I would say volatility or cycle. Yeah, these mini cycles you have. If you're focusing on the long-term picture, crypto is uncorrelated. And if you are honest, I mean, the positive outlook, the long-term outlook, nothing changed for crypto so far. It's really about this selling we have. And normally you would say if you have a seller which is not motivated by fundamentals, as for example, the German government, then this is more or less a buying opportunity for you. And if you have this long-term fundamental favorable background.
Mm-hmm. Now let's talk about macro for a second here. After hearing Powell's remarks yesterday, what's your outlook on interest rates for the remainder of this year?
I mean, we have to be careful. If you look at the markets, we are always pricing in the Fed rate cuts, and we never got it. But at least you see a momentum towards lower inflation rates. If you look at the CPI is very important. But finally, also the employment data are coming weaker. And if you look, for example, at Truflation, which is more or less a real-time inflation expectation, it's already at 1.8 or 9%, if I remember right. So the momentum is definitely for lower rates. And if you read between the lines, Powell also wants that. So they are still cautious and say they are data dependent, but the CPI and also the PPI prints at the end of this week are really important. So when we see lower rates coming in, lower than the expectations, or at least at expectations, that's pretty bullish. And finally, also bullish, I hope, for crypto again.
Do you pay close attention to Truflation? Because I remember I reported on that years ago and then never heard about it again. This is the first time I'm hearing about it again, especially hearing from a trader.
I mean, CPI is super lagging. And whenever you have, also use 5-year forward rates, inflation expectations they derive from the market. And I also like Truflations because I think it just gives you a faster picture. Now, is that always right? I don't know. But at least for me, it's a faster indication because unfortunately, the Fed officially, they are looking at really lagging data, the non-farm payrolls and CPI. And for markets professionals, that's far too slow.
Right. So I want to zoom out here for a second. The past couple of months have not been so great for the crypto market, particularly the past 2 months, including for Bitcoin and Ethereum. What do you attribute this bearish sentiment to and during the summer months?
I mean, it's the normal behavior, I would say, after a halving cycle. If you look at the last 2 months, I mean, in April, we had the last hooray with the meme coins, this whole meme coin craziness. And that's often an indication for market froth. And so after the halving, normally you have these strong, volatile sideways markets, which drive everybody crazy. So for me, it's not unusual. And also keep in mind, in those bull markets, it's normal to have drawdowns of, let's say, between 20 and 30%. And that's precisely where we are at the moment. It's not out of the blue. We have this strong, again, selling from the German government, right? But gladfully, on the other hand, we have the ETFs. We have positive inflows into the ETFs. We always thought these are paper hands, but it seems that these are really strong buy and hold buyers. And so that's very encouraging to me. And there's nothing to worry at the moment.
Now, speaking of the ETFs, as I mentioned earlier, we've learned some of the fees for the potential ETFs from the potential issuers, and we're hopefully seeing more details come in as the week goes on, and then we could potentially see them hit the market as soon as next week. What are your expectations for inflows here, especially compared to the spot Bitcoin ETFs? And what do you think the impact is going to be on the market for the rest of the year?
Yeah, so two things. I think the Bitcoin ETF came in a more favorable environment, but also was better communicated, I would say. But as ETH is just a smaller play, I expect, and I think also other researchers said that around 20 to 30% of the flows we've seen for the Bitcoin ETF. And I think that's prudent to assume. It's just a smaller brand name. For a lot of investors, I think it's harder to get, right? It's the tech stack play. Yeah, Bitcoin is digital gold. That's easy to understand. Although I also like this analog with Ethereum being a digital app store, right? When you compare it with your phone. But nevertheless, I think for a lot of institutional investors, it's harder to get. So we need a little bit more time. We need this also positive price momentum again. But maybe the Ethereum ETF is a catalyst for that, because I think overall the expectations are very low when it comes to the Ethereum ETF. So maybe it surprises to the upside. Yeah, but I wouldn't surprise to see maybe in the first week 500 million, which would be great, right?
Yeah, I agree with you here. It's interesting that you say the spot Bitcoin ETFs were better communicated, because I also feel like there was, a bigger wave of enthusiasm in January when the spot Bitcoin ETFs launched. And a colleague of mine made a good point yesterday in a call. He said that a lot of people still don't know what Ethereum is, as opposed to Bitcoin, is a very well-known cryptocurrency now in traditional finance as well. So totally agree with you here. But thanks, Martin, for coming on this morning and joining us today from Germany. It's always great to have someone from home on the show, so we appreciate it.
Thank you very much.
That was Martin Leinweber, Director of Digital Asset Research and Strategy at MarketVector Indices. Thank you for tuning in today. I'm Helene Braun, and I'll be back with a fresh episode tomorrow where we'll talk about Powell's speech later today and the market's reaction to the CPI report tomorrow, and of course, everything else that happens in crypto markets. So make sure to tune in tomorrow.